What's going on, everyone? Welcome. It is Tuesday, April 28th, 2026. This is Rocco, the all-time high Maltese dog. I'm John Salama, CMT. Let's get right into it. Glad to be with you. Just a portfolio move right here. We are bidding up wheat. No entry yet, although I intend to be in very soon. Today's a bit of a commodity super cycle day, hard assets day. You'll see what I'm talking about. Let's get into the screen share. Some things spot on what we were saying before. We were saying don't be surprised if semis pull back and then some. Guess what? Today is the and then some. Don't forget that thing was up 18 days in a row, the semis. So trees don't grow to the sky. Come on. Semis, tech, and the gold miners pulling back. It was an interesting move. We're talking about hard assets getting bid up, but not the metals kind. So gold and silver going south, but wheat, sugar, those are going higher. Like I said, agriculture right here, staples, we mentioned that due to the charts a couple weeks ago. We said there's definitely going to be a bit of a pickup here in staples once we have a little bit of a beta pullback, and that's what you're seeing today. Even though SPY is down about 70 bips, Dow flat. Qs and Russell are down up almost exactly the same. Looks like almost a program sell, down 1.33%, and vol up about 0.5 to 1%. So agriculture, staples, and energy looking very well. Another portfolio move. It was basically a toss-up whether or not I want to pyramid into more OIH for that type of commodity exposure or enter a new position, which is WEAT, and that's the wheat ETF. Though we're liquid, I'm doing straight shares because options, if they do exist, are definitely not liquid. So I chose since you get a little bit of agency here, you get a little bit of options. I chose to go with the wheat edition instead of getting more energy straight up exposure. And we had looked at the charts before, and I said, if you still believe in the story, energy, especially oil, is looking like a pickup here. And our big story on Friday was last week, the whole week really was about a 12% rally in oil and in semis. So which one is going to continue on, which is going to mean revert and correct? And it looks like semis right now, though it's been on a Jordan-like run. All right, let us first go to the dashboard panel, and then we'll get into the markets. Where my Sixers shirt was there on Sunday for that horrendous blowout. Hoping for something different today. So here's the wheat chart, just as we have it up first. Pretty much bidding right here at VWAP. This thing just hit highs just minutes ago. So we'll see. Let me go back to SPY for a second. Okay, so NVIDIA down nearly 3%. The number this morning was OpenAI misses, privately some revenue numbers internally, targets. So everyone focusing on, is the ROI going to be worth it, in AI essentially. So that took down the Qs, down 1.4. Micron, but that stock has, been stock of the year. And then some, down 5%. It's probably a pickup. Without even looking, but AMD down 4%. Again, this is coming off all-time high, so these things are absolutely nosebleed territory essentially. Intel down 3%. That's had an amazing run as well. Broadcom down 5%. So it's just a sweep of semis going lower. We'll look at the chart. This has been vertical. The chart went absolutely vertical on semis, so this is to be expected. We actually called this out on Friday's video. SMH, I'm in that one. It's down 4%. That is okay. The thing has ripped, and it's getting look, I called the level. I was basically a 21-day EMA exponential moving average I saw it to pull back to, and it's moving towards that today. Taiwan semi down almost 4%, exactly the same amount as Oracle. As soon as the AI numbers came out, it negatively reflected on data centers, build, everything reflecting in that whole ecosystem. Meta down 1%, as I said, aforementioned IWM down 1.3%, and that's about it. Another SOXX ETF down 4.5%. Here's the intraday tape for SPY. Again, more light volume here. On the day, we're trending towards about 40 million shares on SPY. We typically average about 60, even in this lower volume environment. So, about 2/3 of a volume day here on the Tuesday. Really, here's at 9:30 the open. They immediately said, let's sell it, and they continue to sell until it hit essentially a real bottom around 11:30 and around 7:09, still going under VWAP, which is still going lower, VWAP on the day. So that's about 710.90. That seems to be resistance. I think it looks like to me like we want to break under 709.5 and possibly flush to the 708. I'm seeing some more of the defensive stuff rally. So when you sell semis, it's not offense on, it's defense. So I can see this flush, and also staples ripping, which we'll get to the chart. So all that's for the intraday chart. So that's why I'm not shocked. We were talking about last week, as I zoom out, and here's the 1-year chart. I said these candles look amazing, especially with this new floor here at 702. So it's an interesting little read here. The all-time highs for SPY, again, were yesterday, believe it or not. Looks like here, well, here is the 27th here. I'm denoted here at 715, call it 716 almost in SPY. And today, a little bit of a give back, $5.50. This is almost a bit of a vertical chart here. Again, this overbleed territory, nice confirmation here. And then more recently, yesterday, I think we had an RSI of 70.6, not bad. I would like to see a little bit higher than what you put in previously. And here you got as high as 73. So not as strong as a confirmation. But all that being said, don't be shocked if this takes a little bit of softness. FOMO is a very real thing. And momentum cuts both ways, up and down. Don't be surprised if this has a pullback to about, like I'll raise my levels before. I said 685, 688, around that area. I think now is very possible over the next 2-ish weeks that we pull back to, through mid-May possibly. We'll see if that sell in May and go away mantra comes back. But I wouldn't be shocked if this pulls us back to about 692 over the next 2 to 3 weeks. So that is about $17 move, inside of, what is that, 3%-ish, somewhere around there. And today we're down 75 bips. So we will see that will probably correspond with a pullback to the 50 RSI, and we'll still be up and away. Looks like everything decent for a bull market. Again, don't forget, I believe tomorrow is the massive day of earnings. It's one of these days coming up. It's like the Apple, Microsoft, Amazon, Meta day. I think it's the 29th. I've been talking about it for a week and a half. That's going to be really put up or shut up for this leg of the rally. Even if they crush it and it's not quite enough, I think that's kind of what the situation was with Taiwan Semi or another semi this morning. The stock still was down, 3-4%. So they could still deliver. These things are priced to perfection here, and then we could probably still possibly have a pullback to about 692. So I'm seeing a pullback in the area to about 690 to 695, as I said, over the next 2-ish weeks. Somewhere through mid-May, and that will be serving as your buying opportunity as we very likely head towards back towards that, we head north and go to that 70, possibly as high as that 7,300 level. I had pointed out doing some math and cycle work, looking at 7,400 for end of summer, and just due to this massive gap of the rubber band being extended here from oversold to overbought in 3 weeks, and that's exactly how you get from that momentum, kind of like fat person on the boat, swinging the entire thing one side. You get from 635 to 710 in just a couple of weeks, and that's exactly how that happened. So let's go in the internals, and we'll see what exactly they're probing today, get us a little bit of an inside story to see what's going on in the short term. This goes in line with what I'm bidding here of wheat. This is DBA, the agricultural fund. We're looking at the multiple sigma movers higher and lower today. Number one, they are bidding up. I know you saw United Arab Emirates pulling out of OPEC, so that makes pricing of oil a little bit difficult. But here we're looking at, we'll get to energy in a little bit, but right here, DBA up 1.1%, getting very close to a new 52-week high that we struck just a couple of weeks after Labor Day at 28.01. Great looking candle here outside the upper Bollinger Band. It has done this, maybe 2 to 3 times when it gets the overbought opportunity here. But with the tail, with the wind to its back here, with a rising 200 moving average, I think this is going to go higher and break those new 52-week highs as we have a bit of this, rush to super cycle in the commodities, the hard kind of commodities. Cane, sugar, ticker CANE, also making 52-week highs. I love seeing overbought registration here. Again, I always say a breakout from a former area with overbought, that is like rocket fuel to go higher. This thing could go, again, notice the ATR is a $28 stock. It doesn't move a ton, but I do think this is headed towards about $28 to about 28.25 in the next week or two. Don't forget, this rally has come already from the area of this breakout at about $27 even, and this ETF does not move an awful lot. ATR is 22 cents inside of 1% for the entire average daily move. But this stock ETF rather has looked absolutely splendid with holding a 50 RSI since mid-February. So there's bull market somewhere, and really the wind to its back. Once March 6th, right after the war, of course, happened, they broke above a 200 moving average, reaching overbought registration for the first time since its prior 52-week high struck in September. And now just a beautiful, almost see like a cup and handle here inside. This looks like it's going to 28.5. I believe options are liquid if you really wanted to. I suppose you can go out and buy the July or August 28.5 calls, sell something against it, something like maybe this month 28.5, or this month 29, something like that. These aren't super liquid, I don't believe, though. Up 1.1%. Looks wonderful. I will be in a sister of this directly, WEAT, instead of this one. Okay, XLP is number 2 that they're bidding, and we had mentioned this. Let me check the notes. It's up 1.25% today, which is a lot for staples. They finally got their time in the sun once people stopped bidding up semis like crazy. So I had mentioned before, so of course the 52-week high came February 17th, just 2 long months ago. And look at this floor here. That's amazing. 200 moving averages here, right? And I'll say the numbers for you if you can't see. 81.07 here for the 200 moving average, and that is truly where it's been holding basically the calendar year since January 14th. What a solid hold here. I think this is going to hold around 82.5 as it starts to break higher towards about $85, and I think that's it. I don't think it gets that roof 85 looks pretty immense. I don't think it's going to have that much of a strong bid. So another $1.50. That's pretty strong for it. About 2% higher. Probably looks decent to sell those 81 puts, but again, these are staples, so I don't think you're going to get paid handsomely in that. But you can check. Otherwise, similar idea, July or August, 85 calls, and then sell something against that to help subsidize that leg of the trade. I think is decent. The rectangle to me is what looks like it's going to appear in for a while longer, this consolidation that it's been in here since mid-March, a couple of weeks after the war. I think staples are going through their own kind of, I don't know if you want to call it regime shift, but it looks like a little box here that's going to be stuck between 81 and 85. I'll raise it even with a little bit of more elevated internal vol here due with that rising Bollinger Band. But other than that, that's a call for staples. So there's worse place you could be in. Going back to the note really fast, I guess it doesn't really matter. But I had said this place looks like not a bad place to stay on the 21st, right there, and stock was trading 82. All right, and then number 3 thing that they're bidding up, energy, and this is like I said, I had a toss-up choice, either pyramid further into OIH, which is oil services essentially, or get into basically a different commodity exposure and go into wheat. I chose wheat, as I feel like I'm mentioning this now for the 3rd time. I think I have what is that thing called? Dementia? Yeah. So energy looks solid. March 30th, this group peaked. Okay, so this was a month ago now, and a great looking candle. We saw this many places on April 17th, just 11 days ago. A beautiful hold here, about $53, and boom, a nice rally. Now what? So it looks, let me move that. I think it'll hang in around this 57 handle. I think it'll have a decent week as it tries to head towards $60 to $61. So again, similar calls. Be careful. Energy is obviously very headline driven. There could be a press conference any day, or this, that, or Truth Social, or it's really just pay attention to charts. It's too much. Shooting at a dinner, it's too much. But $54, you could probably sell those puts, see if they're worth it. And then again, you buy the 53s against it. So I'd be able to do something again similar, buying to July or August. Give yourself some time for your thesis to play out and really rip to the upside. And then against it, sell something like I said. Usually that you get that theta decay inside of 17 to 21 days. Usually the SIBO and MIT white papers say that's usually what I stick with. 200-day moving average typically right here serves as your ultimate support here at $48. I see a bullish week here. It's a good start. Monday, Tuesday here, up 2% today is energy. I think it tries to take out $61 very, very soon in the coming week or so. So this is the bull things today. There wasn't a lot that was up today. Let's look at what they're actually hammering today. And number 1, we said look out for a pullback. And it's happening one day at a time here. The SOXX down 4% today. It is what the folks are talking about, of course. It is your biggest ETF mover. That is a massive move, of course. We had called out here before. Again, this is nosebleed territory. I'm not sure if you can see this on the screen, but this is all green from March 31st to April 24th. I know someone that just went very heavy into semis. It's very difficult to get in on the 18th day. That's all I'm saying. You're asking Jordan or Shea Gilgeous-Alexander, whoever, say, score 40 points for me again this 18th game in a row. And they're saying, I can't, I'm human. And that's the semis saying, yes, they're machines, they're corporations, but corporations are people and they're human, and trees don't grow to the sky. This is an immense overbought period. But guess what? We had this just last September, and then it consolidated. It basically ripped basically inside of its own 50% retracement of its gain right there in terms of the quarter. You bring right there, and then what happens? We resolve higher. We invest in in the future. Technology is the future. Semis are the best way to play that. It's kind of the A equals B and B equals C, A equals C type thing you learned in school, you know. So as we kept on going here in terms of where should this pull back to, I still say 400 is a decent spot, believe it or not. So that's $35 off from here. I know that's going to seem like it really, really hurts. That's about another 8% decline. Guess what? It's done 4% today. This is a 1x ETF, not 2x or 3x. So we're halfway there. This group will probably be in the penalty box. I think it looks like for the next 10 to 14 days, barring some amazing news. And it's one day, talk about me having dementia or schizophrenia. These hyperscalers say amazing things, just like a couple of days ago. The whole AI store, everyone couldn't get enough, right? Hence this chart being up 18 days in a row. We'll see what Meta and all these other folks have to say. If they're laying off 15% to subsidize, to finance all these investments, we'll see how the market internalizes it. I think it's going to be kind of a visualization of that in the market. Pay attention to what these companies say in guidance over the next couple of months, as they also don't know what the price of oil is going to be and where the war is going to go. But again, $400 for this seems like a pullback. So what trades do you do? I'm still in this long, full disclosure. I'm following the ATR rule. So I'll basically be out at a 10-day low or where my ATR stop takes me out. But for this, as I said, I think it's going to continue to go lower for about 2 weeks. Be careful because of the earnings. You could sell, I think, 450 calls, but it is a risky trade. I would buy 455s against it. That's personally not the way I'm playing it. But that's one way you could. Let's zoom out a little bit. XLK, you can't have a drawdown in semis without basically a broad sell-off in the broader XLK. And that's what's happening, down 2% for the technology sector. That's a big deal. But this has gone absolutely vertical, basically also green every single day except the 23rd. Yeah, basically down 1.5% day. And now we're essentially right back to those levels. This was all-time highs yesterday, touching basically 161. I think this group will also be in the penalty box for about 2 weeks. This is a very liquid way to play this. So is the SOXX. But I think this can have a very normal pullback to about 149 to 150. That is $7 off, or about 4% away from here. Again, be careful. A chunk of this sector is reporting this week, so do understand you do have risk through through the earnings. Spotify was this morning. Some give and some take, and they missed, I think, bad, or the market internalized it as a miss, and it was down 12%, I believe. Right here, I think you could sell those 160 calls, buy something against it, like the 162s. Basically, excuse me, is the way I would see it. But this looks like it's headed towards 149. If you just need some bearish exposure against your book, I don't think a horrible way is to buy maybe the 150 puts of June or July. But this is just a short-term tactical fitting. I'm not sure, tech. I'm literally along the SMH. I'm just saying how to play this near-term 2-week structural tactical correction. All right, and number 2, GDX. They are crushing this one, down 4.5%. Interesting to see in terms of the whole, commodity cycle, but that's more commodities that you eat and things, wheat, sugar, etc. This group looks decent to me in terms of, take a look at this. Gold miners peaked March 2nd, the day of the weekend of the war, right before, I believe. Yeah, that Monday. So the war was over the weekend, and that Monday, the gold miners peaked at 117 here. Beautiful hold last month, 5 weeks ago, even having oversold, rising 200 moving average, now putting in a higher low. Guess what? This has been a tough group to play. Every time you say it looks like, buy it, you look like a dang fool. What I say here is I'd want to be buy into strength here. So I do like the hold. I do think it'll resolve higher. What I'd rather do is have it close at or above 94, and then I have more conviction that this is headed towards 102. This chart, I want to see it more stick the landing here. I'm not really super impressed yet. I want to see it succumb over here and overcome rather, and give above this noise, all this area that's really been a problem for it essentially since mid-January. That's been doing a ton of price discovery 2 months before the war started. That's when we had the whole Venezuela capture to begin 2026. I want to see it close above 94. That'll correspond with it getting to a 50 RSI, and then I'll know the wind is to its back, tailwind, and the buyers have control. Right now, it's still a bit of a seller's market. It's kind of bottoming in terms of what is relatively bottomed out with the RSI minus, of course, this trough in mid to late March. So I'd rather have a close above $94, sit and wait there. And then I do think it'll have fuel to the upside. But gold miners are hating it today, down 4.7%. Let's keep going here. So the top three gainers of the past 5 days, where have they been flocking to? Number uno is oil. Okay, it's still the story. Number one, up 9% over the past 5 trading sessions, or almost 2%. Today, up 4%, bucking that trend. And again, don't forget that fear and everything 3 weeks ago. And this is USO, not straight up barrels of oil. But the ETF hit 144. We're at 140 today, okay? And people back then were trading every single word of, Trump saying the war could be over in, 72 hours, 2 weeks. Some people say September, We're trading on all that. And look, right here, we are rocks throw away from new 52-week highs in the USO. And we have, a lot of commodities underneath being bid today, being the story. So a big move today in oil, the number one gainer of the past week. Right here from the chart, this looks wonderful. I talked about how this candle was just shooting at me, this dragonfly doji, and that's when I bought OIH. And this looks like it wants to go higher. This looks like it's going to have a good week, in my opinion. This looks like it's headed to about 145, and again, the highs are at 144. So I'm anticipating new 52-week highs here. I'm looking at today. They shot up as high as 142.20 today, and then they backed it off a little to where it is right now, 140 quarter. VWAP 139.80 though, so definitely win to its back. I think this has a good week, and this goes higher. I'm happy to be in OIH, how I'm playing this one. But oil looks absolutely strong. The best ETF long for the past week. Next, SMH, we looked at this already. We looked at the SOXX. It's the same thing. SMH is much more heavy in NVIDIA, down 3.7%. What I said for SOXX goes also for the S to the M to the H. Penalty box for the next 2 weeks or so. I'm long this one. I think totally normal spot due to the just vertical nature of this. And look at this. Old resistance becomes new support. Typically, I'll even raise it. I see a pullback to about 450 here, which is the nothing fancy 21-day exponential. This is just finally getting out of overbought registration. So there people are still bidding this up to the moon. Hence, the candle's not really being that significant, down 4%. Had a massive week. We're only down to where we were 5 days ago, for goodness sakes. The SMH, though, the second best gainer on the board, up 1% a day, essentially now, because of the decline today. I think that 450 pullback, it doesn't have to do what I say, but it would make sense in terms of gravity for this to pull back about another $37 or 7.5% or so, and that will correspond with the 50 RSI. This is only its second red day since March 30th. Dang. All right, and then number 3, I'm long this one too. Let's go. Anyang, South Korea up 5% over the past 5 days, average of 1%. Again, reversal there in terms of that trend. This one, new highs just yesterday at 158. Enjoying that, but bearish divergence. Very easy to see here. Not even a 62 RSI, and you get new 52-week highs. Don't love that. Lets me know sometimes you can get very quickly a pullback to where actual liquidity and institutional conviction lies in the bid. And for me, that's close to the 21-day exponential moving average, which would be $144. Charting, I find, works really well, especially on the geographic ETFs with a lot of momentum that trade like this in South Korea. So I'm not shocked. I'm using my stops to protect, but I'm not shocked at all. This should pull back to 144, I think, in the next 2 weeks. That's why you move your stops and take gains along the way. That's about $9 off from here, or 6%. I think it is likely to happen. Be on the lookout for language from the hyperscalers that possibly push it. Don't forget, South Korea is the home of the AI memory game. All right, so top 3 losers of the past 5 days. Jets is the worst one, and this is kind of a simple thing. You don't have to, sometimes people say, what's your edge? What's your edge? If oil is your best trade on the board, guess what? Airlines are going to be your worst trade long because of the rising costs. It stinks for them, just straight up. So here are the Jets, and look at this ugly. This is exactly this March 17th candle. That Dragonfly Doji on OIH or USO and XLE is exactly the inverse, almost like think VXX versus S&P, of the inverse of the calendar right here for Jets, obviously, because airlines trade inverse. So this is called a gravestone doji. Factually, visually here, that it was not ready for 28.80. And that's what I'm saying. Very quickly, you get rejection there, and it dropped all the way down here to $25. I don't love this group because I still think energy is going to have a decent week. I think it's going to try and find a floor over the next 7 days or so. I wouldn't be shocked if this takes it to potentially as low as $24. I think this should hold as 23.5. That's shockingly been holding as a floor all the way going back to August. So that's actually pretty stupendous. Don't forget, this group peaked a couple days before Valentine's Day at 3130, and now a falling 200-day moving average, just barely falling. I'll call it flat line, actually. It's 2630. Looks like it's going to move on its way down very, very soon. So that is the Jets. It's your worst trade over the past 5 days, down 5.5% on an average of 1% a day. Today doing just that. I think it goes a little bit lower, as I said, towards that 24 handle. Trades, you could buy the 24 puts, sell the more near dated 23 against them, or you can outright sell the 26 calls. Be careful though, again, headline risk. If oil were to drop on some kind of announcement, this group's going to spike. I've felt it. All right, number 2, and if I had that ticker before, I'm not going to kick a dead horse and repeat it too much again. GDX, the number 2 loser of the week, and this is actually interesting. I didn't have to change these next two. The 2 losers, number 2 and number 3, have just been in rotation. They've continued. So the gold miners here down 5% on an average of 1% a day. We're going to look at this, and let's go to number 3. KWEB, I didn't have to change that. This is still the number 3 loser, and I said this thing is going lower. I had conviction in that. Let's do the choose your own adventure. Let's see if I was right or wrong. Nope, continues to go lower. I called that out at about 2870. It was the highs of it was a VWAPs of these days. So we'll split the difference, 28.5, 29.30. So we'll call it like 28.90. And here we are at 28 on the floor, a bit on the cusp here of new 52-week lows. That was 27.62. It's 40 cents off. I don't like this group here. This looks like, again, this is going to go lower. I think this wants to go to about this 27.5 region. So you could buy puts, like 27 halves for July or August if they have those, or you can also sell the 29 calls and always do something against it, subsidize a leg against it to help subsidize the trade so you can sleep at night. That's down 4.5% over the past 5 days, or inside of 1% a day. That just continuing its trend. Top 3 trades of the past 5 days. If you've been long oil, short Jets, which is basically the same trade, number 3 would be short GDX. It's actually a tie in terms of percentage return long the semis. So very interesting things going on in terms of commodities, in terms of the semis after this massive run. We will be back with another video. I think I just got filled on wheat, and I will talk to you again later. Peace.